Hi everyone, it's Will. Hopefully you're doing great today. I just wanted to do another episode of What Did I Learn Today? So today I learned something about the HELOC that I have and wanted to share it with you. So let me go ahead and start. And some of it's going to be a rehash, um, except for the last part of it. But I'm just trying to share with others who's unfamiliar in general with the HELOC and what we're working on. All right, again, thank you very much. My name is Will, aka Dr. Financial Literacy. Thank you very much for stopping by. I'm a political economist. I am not an attorney. I'm not a public accountant. I'm not a certified counselor, credit counselor. I'm just sharing my videos and information in terms of what I'm working on. Okay, velocity banking is a method of using a line of credit or someone else's money as a strategy to reduce debt. You can use also a credit card as a line of credit, a business line of credit, also a personal line of credit. But velocity banking is generally a method of using someone else's money to reduce your debt. One of the primary principal things of velocity banking is no longer parking your check or as much of your check into a checking account and just letting it sit there, but placing it onto a line of credit that helps to pay down your debt and your bills. Get it working for you. What is my income? My income is 5390. It's been bumped up. I'm now pulling in about $2,000 in my investments and also my regular pay of 3390 from my employer. What are my expenses? About $4,800 averaging. So it has increased as a result of the investment. I'm spending and using resources to generate an additional about $2,000 a month or close to $2,000 a month. What is my monthly cash flow? It's up about $200 from 390. Woohoo! And the cash flow is going to be important because the cash flow is living on any one of the lines of credits that I select, and that is a key to helping reduce your debt or my debt that I use for my credit cards. So take for instance, when I had a credit card bill of 7,500, in addition to doing other strategies, each time that I was leaving that 390 cash flow onto the credit card, it was building and it was compounding. So first month it was 390, the next month 18,780, then add 390 to that. So as long as you're having cash flow and allow it to sit on the debt, that is what's really helping you. My debt's 321. Today I looked at three credit reports. Um, Credit wise with Navy Federal, they had me at 321,062. Half of that is student loans. I'm at $159,000 in student loan. The student loan is going up is a part of compounding interest. Um, Wells Fargo, when I looked at my Wells Fargo had my total debt at 330,000 458. And again, student loan is a part of that. And lastly, credit wise, 328.92. Credit wise is from Capital One. They had me at 328,920, and student loans 11000 and 0. So of my 300 some $1,000 across all bureaus, $159,000 is in student loans and 110 is in mortgage, and the rest is in consumer debt. All right. Now let's get keep going to get to the what I learned today. These are just some basic objectives. Looking at credit report that I talked about earlier. You want to set up a budget. That's important in doing velocity banking, and see how it works in the real world. And talked about how interest is calculated in general, using particularly through velocity banking, and track your credit score. So that's all a part of the aspects of velocity banking that I've worked on so far. Velocity banking. Well, traditionally before I came across velocity banking, I was putting my money in the bank, paying all the bills from the bank, and that 390 or 590 would just sit in the bank in general and really not do anything for me outside of 2 cents or 3 cents. Now with the velocity banking, I get my paycheck from my employer, immediately goes to the bank. I select a credit card, used to select a credit card and ran my bills and checks through there. Now, because of the HELOC, I'm pretty much running everything through the HELOC, all of my bills. The cost to obtain the HELOC that I'm using as a line of credit, talked about that before. Now, this is what I want to talk about today. Earlier today, I went on and made $1,000 payment to the HELOC 8/6/2024 at 10:47 a.m. Made a payment that went through successful. So my principal should drop tonight from about 45, I think 45, 111, 45, let's just say 45, 100. So I made that deposit of $1,000. So that should drop it down to 44, 100. And as stated before, the HELOC calculates on the average daily balance. So tonight or today, that's going to be 44, 100 times the interest rate of 1025 divided by 366 days, because we're in a leap year. That should bring down my daily rate to $12.35 per day. As long as I can keep this at 44,100, I should be paying $12.35. Now, when I first started the HELOC at 50,500, was paying a rate of 14.14. So as the daily balance or the principal balance comes down, so too does the average daily, I mean the rate that is calculated per day. So I've gone from $14.14 per day to $12.35 per day. The HELOC statement closes on 8/8/24. 8/8/24. So that's why I'm still trying to get as much as I can into it. So today I put another $1,000 in. It asked me, hey, you've already scheduled one payment. Do you want to make another payment? Yeah, let's go ahead and make another one. Okay. And this is what I received. Now, if you see to the left, they've already given me the opportunity to pay my next month payment, but they hadn't calculated the full interest, so it's going to be higher than that. And I've also can put something toward the interest in October. So at least with this particular HELOC, I can continue to put money ahead of time to bring down the average daily balance. But for now, because I'm still in the cycle that ends on the 8th, I'm just adding to the principal. So I just went in to make another principal payment, and I got this message in red. Let's go to the next screen. All right, this is what I got in red when I went to go make another payment. I'll let you take a minute to read that. All right, now that you had opportunity to read it, let me read it one more time. We apologize, but the online transactions are limited to one per day. Now, prior to this, I've been dumping in transactions, I think maybe twice a day, if not more. So I'm gonna call him tomorrow to find out what's going on. You may, however, schedule multiple payments in the future. If you would like to make another payment for today, please contact the mortgage servicing customer service department. Okay, so they're not saying that, but online, okay, online, I'm limited to seem like one per day, but I can call in and make multiple payments or future payments. So I'm gonna call in tomorrow and get some more clarifications on that. And again, each HELOC has its own rules and regulations. It's less regulated by the federal government than a mortgage in general. But again, they provided me 150 pages of information. Uh, it's probably buried in here. I should have read it more. The devil is in the details. So I'll just continue to read through the contract and see what other things are there. But here it is. It should be in the contract. If not, then I will talk with them about it. So I just wanted to bring this today to you again. Another what I learned today in terms of now I have understanding that I'm limited to one transaction per day. If I like to make another payment, I guess I could call them and I'll check on that or future payments. All right, so if you look at getting the HELOC, continue to look at what I learned today and hopefully be able to ask some additional questions for your HELOC. This particular HELOC that I have, I'm definitely blessed that I have it, and it's more paper-based and more electronic based than the other HELOCs. All right, well, thank you very much for stopping by. Have a great day, everyone. Bye-bye.